For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
Hello everybody, welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. And today we are going to talk about this topic, which is environment, social, governance, investing. So in short, environment, social, governance stands for ESG. So we call this the ESG investing webinar. So welcome everybody to this ESG investing webinar. How are you guys doing? Yeah, today our COVID number is still break previous highs again. So yeah, hope that our stock market will also be like our COVID number lately. Okay, so everybody please stay safe in this pandemic, and stay safe. Refrain from going out and join our webinar so you can gain more knowledge and avoid any physical contact with any person. Okay, so yeah, thanks everybody for tuning in on time. So as you know that ESG has become more and more important, and nowadays there are a lot of institutional funds who need to invest based on this ESG investing standard. So they cannot simply invest in companies that do not uphold a high standard of ESG in their corporate governance. So that's why some funds have to divest from companies that have that have shown some violation to some of the ESG standards. Today, we are going to delve deeper into how these ESG affect investing. Right? So before we begin, just want to go through a disclaimer. So whatever we share on this webinar is only for educational purpose. In no way that we give any recommendation to buy or sell any companies in this session. So if you decide to make any investment decision after this webinar, you do it at your own risk. All right, so allow me to share with you the speaker profile for our invited guest speaker today. And she had just spoken to you on this past Wednesday. And today we are very honored to have her back on our show today to talk about ESG investing. Now, she's none other than Pauline. Okay, now Pauline is a licensed and experienced financial planner who is certified by the Malaysian Securities Commission, a financial planner representative license CMSRL, and Bank Negara Financial Advisor representative license. Pauline is also a cross trainer and public speaker at Financial Planning Association Malaysia and Bursa Malaysia. Now, over 25 years in education, she has accumulated over 50,000 students and conducted over 200 large-scale corporate courses. Now, other than being a professional financial planner and educator, Pauline is also a best-selling author who has published 6 books on investment and financial planning. Her articles have appeared in financial magazines such as The Personal Money, Money Compass, and many more. Yeah, so are you ready for Pauline's? All right, so without further ado, let me hand over the session to Pauline. Pauline, the stage is yours now.
Okay, sure. Allow me to share my screen.
Yes, go ahead.
All right. Okay. Good evening, everyone. Good to see you guys again. We just had a session on Wednesday, so now I'm seeing you guys again. So I see that in the chat, Albert say nice to see me again. Okay, it's nice to see you too. Okay, so in today's session, we are going to talk about a very in thing. Okay, so this everybody is talking about ESG. So what is ESG? Okay, so just now Shane has actually said that this ESG is every fund managers they are looking at. So in fact, for today, right, we should be looking at this ESG from the fund manager's perspective, because after all, who is buying the stocks? Okay, if the fund managers are buying it, so that will drive the liquidity. So maybe we should also look at those stocks that are, bought by those fund managers as well. Okay. All right. Let me open up like, okay, like this. So today's agenda we will have what does ESG stands for, and then the role of ESG in investment, Finch ESG score template. So we are looking at ESG from two perspectives, because for ESG not only we see it in the equity market, we also see in the bond market as well. So we don't really delve too much into the bond market, but more onto the equity. But it's just that I use this Fitch ESG score template to show you what are the guidelines and the criteria for the template for the scoring part. So it's just a template. Okay, but the emphasis is still on the equity market. And then we are going to assess the ESG scores for the Bursa Malaysia stock. So at the end of the session, right, about maybe towards the end of it, I'm going to show you some of the Bursa Malaysia stocks, and then you are going to guess what is their score. Okay, so these scores are actually from a reputable scoring website and sustainalytics.com, and I'm going to test you guys like based on your judgment, what's the score that you will give these stocks. Okay, so I'm going to go through one by one, and then hopefully when you gain your knowledge, you'll be able to estimate the score, because after all, when you look into the company, right, you wouldn't be able to get the scores immediately. So you must be able to assess each company, like what is the potential score, like ESG score for each individual company. So we are going to look into that. Okay, some history and background. ESG, environmental, social, and governance investing started all the way back in 2004 by Kofi Annan. So he's a former UN Secretary General, Kofi Annan. So Annan wrote to over 50 CEOs of major financial institutions, inviting them to partake in a joint initiative to integrate ESG into capital markets within the framework of the UN Global Compact. So he actually came up with this idea, and then he personally wrote to 50 CEOs of major financial institutions. So it's an effort, and then this effort took off. So the importance of ESG. Since then, ESG investing has grown in importance worldwide, with increased awareness and adoption rates. According to Deloitte, the percentage of retail and institutional investors that apply ESG principles to at least a quarter of their portfolios jumped from 48% in 2017 to 75% in 2019. Furthermore, a 2018 US Trust Wealth and Worth survey concluded new investments in ESG funds could total 20 trillion in the next 2 decades. So the market for ESG is huge. Okay, so everybody is looking into ESG investing, and then if the fund managers are participating, so that will drive the liquidity. So what is ESG investing? So basically, the word E stands for environmental. So this includes climate change strategy, biodiversity, water efficiency, energy efficiency, carbon intensity, carbon means carbon dioxide, environmental management system. So all these were referring to the global warming issues, because if we do not treat the environment well, so most likely the impact is that it will create global warming, and then the temperature will increase a little bit by a little bit. So every increase of 1 degree, it's a big thing, okay? It's a big deal. So if you increase by 1 degree Celsius, it will mean that the crops, okay, it will affect the crops, and it will affect the a huge food sources, and these food sources will drive up the inflation. Okay, so if let's say all the crops and everything become more expensive, then you will have inflation. So when you have inflation, that will result in raising of interest rate, and then the economy will have a contraction, and then the share market will drop. So all these are all affected. So that's why in fund managers, they are very concerned with the environment. Okay, and all of us should be concerning about environmental care for the environment. And then the next one is social. Social refer to the equal opportunities, freedom of association, health and safety, human rights, customer and product responsibility, child labor. So all these, okay, recently we see in China, what happened was the Xinjiang, right? In Xinjiang, for the human rights. And then because they said that the cotton, the raw material, the cotton was actually produced by those people whereby they do not have the human rights. So then they boycott. So then they had a lot of retaliation, and some of the Chinese people also boycott those US company, and then this. So in fact, if you to look at having human rights and child labor, all these product customers and product responsibility, these are all important. And then if the company can take care of these issues, especially when they have a report. Usually these public listed company, they will have a so-called a sustainability report. Okay, for example, Maybank publish every year a sustainability report. This year, last year 2020, they published I think about 90 pages of a sustainability report. In that 90 pages, it's very detailed. Which society is benefiting, what how did they contributing to the communities, and then the governance, and then environmental is very detailed. So in the end, all the public listed companies, they should be looking at producing these kind of a sustainability report, so that they want to keep the investors aware that they are really into ESG. Okay, they really care for the society. The governance refer to the business ethics, compliance, board independence, executive compensation, shareholder democracy. So what one whole word, okay, what it means is that this one is referring to transparency. That means you want to be accountable for your stakeholders, major stakeholders. So whatever you do as operating as a business, you have to be accountable for your various stakeholders, including your customers, your suppliers, governments, your own management board, your everybody. So this is kind of like be responsible for. Okay, so that we will look into further. Okay, which is ESG. Okay. So the philosophy behind the ESG criteria is to recognize the effect companies have on the environment and the society as a whole, and in turn, how their ESG policies can impact their own resilience and profitability. A lot of time, you may think that, oh, ESG, that means that you cannot make money already, is it? Because you have to take care of the human rights, you cannot ill-treat them, you have to pay accordingly, and then you have to take care of the environment, you have to take care of the packaging, it cannot be too damaging to the environment, so you have to spend some money on the packaging. And then all the procedures from the supplier until the customers, the whole supply chain, everything has to be ethical, environmental friendly, and everything. So all this costs money. So if you to look at it, if you think that it costs money, right? But then how about the long run? So a lot of time, if you can spend this money in the short term, the benefit is that you can gain reputation and good reputation. And this good reputation, they are the intangible assets to your company, and then it will give you many fold or many times in return. So you can in fact you can be profitable. Okay, it's not that after you have done all these ESG things and then you cannot be profitable. No, in the long run it has to be sustainable and profitable. So companies' environmental policies might contribute to water its reputation, and its regulatory compliance will be at risk. Now, the importance of having this environmental policy is that what happens if you do not take care of the environment, and then you do not have a good policies in terms of the your managing or how you manage your waste, your production waste, and then it will cause pollution. And certain industries, they are more prone to all these environmental damaging the environment. Certain industries. So later on, we'll look into those companies. So does that mean that that's the end of these companies? No, that doesn't mean that. So when you know that you're operating in such a harsh environment whereby you are actually not doing the environment any good, but doesn't mean that you'll be, chopped a mark saying that you'll be dead forever. No, you can do something. So a lot of these oil and gas companies, right, they turn to renewable energy. So besides developing those extracting exploration, right, they also look into the renewable aspect of it, renewable energy. And all those utility companies like Tenaga, TNB, and Malakoff, these utility companies, right, they were also looking into renewable energy like solar energy. Okay, so this will improve their image because they care for the environment. And for social policies might lead to low worker productivity and morale, then increasing the chances of high employee turnover or absenteeism. So you need to treat the employees well. Okay, so if you can treat the employees well, then that will improve your productivity. This could involve a lack of compliance, deteriorating relations with shareholders, lack of diversity within the leadership, corruption, and other factors that can impact a company's financial standing or reputation. So have the stakeholders, the shareholders, or maybe the management itself, they have to have a good governance, because all these corruption and all these lack of transparent, these will affect the reputation of the company. So of course, ESG principles are just one of many indicators investors will take into account in their decision-making process. So after all, there are so many factors, right? So ESG is just one aspect of it. Okay, you cannot rely totally on ESG. However, it is the hottest theme in the world now. So everybody is talking about it. So if you are not aware of, that means you are not in the trend. You're not in the team, okay, investing team. Now, this one is the Malaysia pledge to the environment, because as a oil producing country and also a resource, we are full of natural resources. So we were susceptible to all these, that cause damaging to the environment. So that's why we need to participate in global efforts to address climate change, even before the Paris Agreement was signed in 2009. So like 10 years ago, at the United Nations Framework Convention on Climate Change, meeting in Copenhagen, former Malaysian Prime Minister Najib Razak announced that Malaysia would pursue a 40% reduction in its carbon emission intensity by 2020, contingent on adequate technology transfer and financing from the developed world. So back in 2009, we already pledged that we want to reduce the carbon emission by 40%. Okay, although the additional financing and technology were not forthcoming, Malaysia was able to achieve a carbon emissions intensity reduction of 33% by 2011 and is likely to meet this goal. Okay, so Malaysia's latest commitment is that reflected in the nationally determined contribution, is called NDC, to the Paris Agreement, is to reduce its emissions intensity by 45% by 2030, with 10% of this goal contingent upon international assistance. Okay, so we have even pledged 45% of reduction by 2030. So all these are carbon dioxide. Okay, now there's this index. Not many of us know about it. I didn't know about it until I do research. So it's in fact has been there for many years. So this is called the FTSE for Good Bursa Malaysia Index. FTSE. Now FTSE for Good, right? Is actually okay. Let me explain this. FTSE for Good Bursa Malaysia Index is actually constituents that selected from the constituents of the FTSE Bursa Malaysia EMAS Index of the 100 companies screened in accordance with the transparent and defined environmental, social, and governance. So what it means is that this index, right, it has a basket of stocks. And this basket of stocks are from our EMAS index, 100 of them we selected and put in. Of course, it has to screen through those criteria. You have to screen through the criteria. So the companies in the Bursa Malaysia EMAS universe with an ESG score exceeding a defined threshold are eligible for inclusion in the FTSE for Good Bursa Malaysia Index. So you need to have a certain score, then you can be included in the this index. Now, so the main objective of this index is that by having this index, right, you are actually encouraging those companies that are not in the rank. They wanted to be in the group, so they have to do extra effort in order to get into this rank. Okay, so this is a good index whereby it actually motivates the Malaysian companies to achieve certain target of the ESG score so that they can be included in this index. Okay, so there are currently 75 companies in this index. So later we'll look into that. So FTSE for Good Bursa Malaysia Index have all these 14 criteria. Okay, so let's take a look. Basically, you have these three main themes, which is environmental, social, and governance. And out of the environmental, you have the biodiversity, climate change, pollution, resources, water security, supply chain, environment. Now, supply chain environment. Maybe I should ask you this question. You look at this environment, okay, supply chain. So you are looking at when you are doing a operation, a business activity, right? So you need to get raw material from your supplier. Okay, so that's supply chain. Now, how would that impact the environment, and which industry are more susceptible to this kind of risk? Okay, so all these are all risk. Okay, all these are all risk. So which industry are more prone to this risk? That means your supply chain environmental risk. That means it will involve pollution. Okay, which industry? Anybody? Timber. oil and gas. These are all natural resources, right? Okay, one more industry, one more. I just want to see one more. Okay, where's my chat? How come I can't see the chat? Oh, okay. The chat is the Q&A, right? You know, there's another one. Okay. Oh, furniture, oil and gas, power, agriculture, plastic, metal. Yes. Plantation. Okay. Palm oil. Okay, so you got it. So yes, palm oil plantation. So this industry, in fact, is more susceptible to the risk, and the risk is the environmental risk. So, as you know, the palm oil industry, you need to clear the forest. So when you clear the forest, we call it what? Deforestation, right? Deforestation. Okay, deforestation. So then when you are cutting down the trees, what happens? The endangered species. Endangered species. So what are the endangered species that the people are concerned? Do you know? Which animal? Which animal you think? Malaysia, we have what? Tiger, global warming, animals. Tiger, yes. Which animal? Apes. It's called orang-utan. Yeah, orang-utan, yes, that's right. Okay, so if you Google, right, in the Google, it says that it will cause the orang-utan and the what rhino, there's one very rare species of rhino or whatever to be extinct. Okay, so people are concerned with these animals. So therefore, the EU, okay, they ban the Malaysian palm oil. And now Malaysia, we have to put in the law, okay? I mean, to contest, right? We want to rebuild this thing. So it will be in a legal case. So we'll see what happened. And then, but nevertheless, this industry is concerned about the environment. Okay, so you have other industry as well, like the oil and gas and all those that affect the natural resources. Okay, because after all, these natural resources, right, is non-renewable. And that's why nowadays, especially the investment theme seems to be surrounding with electric vehicle, renewable energy, green energy, all these batteries, all this. Okay, so the Bursa Malaysia stocks that are involved are those grey tech that have the batteries and those technology stocks that involve in the green energy, and these companies will be sought after because it's an investment team. It's like a team that everybody chase after. Of course, this investment team will come and go. So as long as you are in the team, right, you are in the trend, okay, just go with the trend. Okay. Okay, so this one is the environment. So another one, we move on to the social. Social refers to the people relationship. Okay, so in this case, the environment is the nature relationship. Now this one is the people relationship. So these people will be your own employees and there's one word here, health and safety. This one right? The employees' health and safety, the human rights and the labor standard. And there's one supply chain social. Okay, so I want to focus on this. Which company in the world they care about the farmers? See who can answer this. Which company is a very famous company in the world, right? It's a US company that care for the farmers. They care for their income. They want them to be sustainable. They help them, they train the farmers' skills, and then they help them to increase product. Yes, Aslan, yeah, right. Starbucks. I was thinking, do we get any answer? Okay, so Aslan, you are right. It's a Starbucks. Okay, so they are famous for what they are doing for the farmers. They care for their livelihood. So they not only they just simply buy the coffee beans from them, they actually help them to reduce the cost of the, the farming and also become more productive, okay, efficient in producing for them, okay, and they want them to have a sustainable income as well, okay. So if you can do that, so that means, do you gain reputation? Sure, you will gain reputation. So that means your company is not those it's exploit people kind of a company. You care for people's livelihood. Okay, then the corporate governance. So this one look at risk management. So after all, right, after all these things, in the end, it go back to the management level, because this governance is referring to the management level, whereby you look at how the management it themselves to manage the risk, the overall risk. They can manage the risk for the this particular risk. They can manage the risk for this particular risk, and then they can manage the overall risk of the company. So this part here is actually the most important of that company, because it's in charge of the overall risk management. Okay, so if you can, like if let's say you're a shipping company, those shipping company, they carry, let's say crude oil, okay. Then what happened is that if you are not careful, you do not manage your risk well, and there's some procedures that you didn't follow or whatever, so then you lead into a accident, and that accident will cause the ship to have pollution. Yes, sea pollution. And that sea pollution is terrible, it's very detrimental, because the sea is so big. Okay, so there's no way you can clear it. There's no way. You just have to let it seep through, and then it will be spreading out permanently in the overall sea. Okay, so you can't take it out. So that sea pollution is the most damaging to the lives, to the wildlife, and also to the environment. So if you are operating in that kind of a business operation, then you need to have a very good governance in terms of your procedure, your SOP, and everything, such that you want to minimize the risk. Okay. Okay, now this FTSE for Good, you can scan the QR code, and then you can get this report. This report is the latest report, which is March 31st, 2021. So it tells you our Bursa Malaysia companies, stocks, public listed companies that are in this index. Okay, so you can scan this, and then you can actually get this report. So I'm going to show you this report. Is it this one? This one? This one? This one. Yeah. Okay, so this is the one. It's called the FTSE for Good Bursa Malaysia Index, 31st March 2021. So it's a 3-page kind of a report. So it has this information. So I have already print screen, and then we go through them. Okay, I have print screen them. Okay, so you can see that the first diagram here shows you the blue line is the FTSE for Good index chart. Now this FTSE for Good index chart, they have their own index as well. So you can see the chart also. I'll show you later. I just want to share with you this this performance benchmark. So this is to benchmark against the mass index. Okay, and then you can see that this actually below the performance of the mass index. The blue line is below, because the blue line is the FTSE for Good Bursa Malaysia Index. So the blue line is below. So that means in terms of performance, it is below the mass index. Okay. But how about our KLCI index? So from the Bloomberg, I can actually get this FTSE for Good Bursa chart. Okay, so this is a 1 year chart. 1 year chart. And then I compare, although I cannot compare like together, so I open up 2 charts. So this is 1 year chart. So you can see from one glance, right? In fact, the FTSE for Good index, right, is better than the KLCI index. Although not as good as the mass index, but it's better than the KLCI index. You see, this trend is like this, but this trend is better. Okay, so there's advantage in investing in this kind of ESG related stocks. There are advantage. And then you can see that FTSE for Good Index is a series of ethical investment stock market indices launched in 2001. Okay, so a number of stock market indices are available, for example, covering UK shares and all this. So this is the origin of this FTSE for Good Index. It's not from Malaysia, it's from the UK, London. Okay, so this index is from there, and then they have other index for other markets as well. And this index, right, excludes what? Excludes companies due to their involvement in tobacco production, nuclear weapons, conventional weapon systems, or coal power industry, and rates companies for inclusion-based environmental sustainability. So what it means is that if you are in this industry, basically you won't be included. They cut you out right in the beginning. If you are in this industry, you won't be included. Okay. And this is a total return. Okay, so you can have a closer look whereby our mass index is above it. Okay, still a mass index is still above it, and then the ESG, this FTSE for Good is below. Okay. Now, top 10 constituents by market cap. So these are the top 10 constituents in this index. As I said, there are 75 companies, so these are the top 10. So basically, we see a lot of banks here. We have Public Bank, Malayan Bank, Maybank, Tenaga, TNB, CIMB, Top Glove, Petronas Chemical, Axiata, Sime Darby, Plantation, okay, surprise, Hataleka Holding, DG. Okay, so we have top 10 here. Okay. So the industry breakdown will be basically in the technology sector industry. You have 2 companies in the total is 74, not 75. Total is 74. So 2 from the technology, 4 from the telecommunication, 4 from healthcare, 12 from financials. Just now we saw them: Public Bank, Maybank, CIMB Bank, and then one more, I do not know which one. And then 9 real estate, 10 consumer discretionary, 10 consumer staples, 11 industries, 1 is basic material. I'm surprised to see 1 basic materials here. 6 energy, and then 5 companies of the utilities. Okay, so these companies are involved in the renewable energy, the green energy, then they can be included here. Okay. Usually, I would say that healthcare and consumer staples, these are the companies that are more easy in terms of the scoring. That means they can score better. Okay. Okay, now let's take a look at the closer look now. This one, Fitch rating, is for the bond market. Now, if you might be wondering, how would this bond market come into the picture? Okay, so for bond market, we know we have government bonds, and then we also have what? Corporate bonds, right? So when you are referring to the corporate bonds, so it means what? It means that these companies, right, corporate bonds issuers, their rating, their risk factor, their ratings, right, depends on their ability to pay back the loan. Okay, so if let's say your company is operating in a high risk environment whereby you operating the shipping company, whereby you had one bad incidents, and then you need to compensate. Okay, then you need to pay out like millions and millions of compensation. So then that will affect your cash flow, because you need to pay so much money for the compensation, and that will affect your ability to pay back the loan, because you have to pay for all these extraordinary item. So then your company may not be able to pay back the loan. So then this ESG score, right, is particularly important in the bond markets, because the risk factors, right, will increase their credit score. Okay, will affect their credit score, so that if you know which companies are very high risk, then maybe you need to avoid those bonds issued by those companies. Okay, so let's take a look at the template. Because it's very hard for me to get other templates, so I find that there's a Fitch rating template online, and then the topics here are those very similar to those 14 topics that we saw from just now over here, the 14 topics here. FTSE for good, these 14 topics are almost the same under the Fitch scoring template. So, and then they have a very detailed talk about what kind of issues that you're facing. So I was thinking maybe I can let you guys go through these, have a look, so that you know how they can do the scoring, so that when you look at a company, ABC company, then straight away you can look at this company in terms of the ESG scoring, right, from the three perspectives. So environment, you have to look at into these issues. Social, you have to look at that issue, and then governance, you have to look at that issue, and then in your mind you quickly come up with the assessment, and then you come up with the scoring. Okay, so for environment, right, you are looking for this emission and air quality. So this one refer to the emission, so it's something like a waste emission. Okay, so what kind of industry will involve in this risk? You type in the chat there. What kind of industry will involve in this risk, this environmental risk, as in the emission, the waste material, oil and gas, coal mining, and some manufacturing, metal, and also some manufacturing as well. Okay, some of the manufacturing companies. And energy, so this energy usually refers to the renewable energy. Transportation, yes. Okay, transportation, the shipping, right? Yeah, logistic, shipping. So the water use, water waste management. Okay, so this water waste management referring to their waste as well, because sometimes you need to dispose of your waste. Water treatment plant, yes. The water treatment plant is to counter the problem, but the thing is that some companies, right, they want to dispose their waste. Maybe they will dispose of in the river, or the sea or something. So those are causing pollution. So it's how they manage their waste. Okay, so is it have a proper water treatment plant? Overbuilding by developer, glove factories, palm oil mills, liners. Okay, so all these are actually a lot of waste. But for the glove factory, I don't think they have a lot of waste. The palm oil, nowadays they are looking at using the waste product from the palm oil kernel or something. What is it? Okay, anyway, it's a waste product from the palm oil, and then they put it and turn into a renewable source of energy. Is it called biomass? Yes, Yanwun, yes, biomass. Okay, so therefore you see some of the plantation companies, right? They were on that good for the index, okay, which is because they are doing this renewable energy that is caring for the environment. So this will add them some marks. Although you originally you started with a very biodiesel. Biodiesel. Yeah, I think biodiesel. I forgot whether it's biomass or biodiesel. It's one of those. Okay. So the term is either one of those. So then you can actually have some scoring that score you some marks there. Okay. And exposure to the environmental impact. Okay. Then you have the social. Social will be the human rights, community relations, and then you have the customer welfare. Now you see privacy and data security. Okay, which industry are more, you will lose mark on this? Data security and privacy. Which industry will lose mark on this? You can give me some US companies as well. Okay, any companies. I just want to know if you know what are the risks involved. Social media, very good. IT, Facebook, very, very good. All right. Yes, you got it. Yes. So all these IT company, Google, Amazon, okay, so all these, because they have all our information. And can you imagine if the information is being leaked out? Then they will definitely have must have a compensation if let's say there's money involved that lose the money. Okay, so all right, that's good. That means you know. And what is Line? Line is a phone, is it? It's a kind of app for the phone. Okay, it's a phone app. Okay, labor relations and practices, and then employee well-being and exposure to social impact. So basically, you need to care for the workers. You need to care for the less advantaged society. So I see that many public listed companies, when they publish their sustainability report, or even they do not publish sustainability report, but then they put it under the annual reports. Okay, there will be some CSR effort, okay, social corporate social responsibility, some CSR effort. But nowadays CSR effort is not enough. So we are looking at the ESG now. Okay. Yeah. Okay. I see the word Nestle there. Okay, later we'll come into Nestle. I will ask you, what do you predict the score, the ESG score for Nestle? Okay, I will ask you. Okay. Then governance. Governance will be the management strategy. Okay, so it depends on the effectiveness of the management to communicate with the stakeholders. It is very important. You do not want to see the management whereby they are not transparent. Okay, you want them to be transparent. And if there's a risk involved, the management has to tell the people about the potential risk. A lot of time, how honest is the management that they are giving people, investors, about their potential risk or potential issues or potential problems. So corruption free. So all these, you are looking at the potential risk that you may bring to the investors. So before it happens, you have to let the investors know that your company may be running into this kind of a situation. So a lot of time, even especially during the COVID, you can see that a lot of the annual reports, they have to specify that in view of the recession, they will think that the company sales will reduce. Okay, so you have to be transparent. Very light, tight leeway for management. Okay, so actually, it is the management responsibility to let them know. Okay, let the people know. And yeah, okay, so non-executive political appointees. Okay, so all these shareholders, when you're in the management position, you need to be responsible for your company. Okay, financial transparency, all this group structure and all these things. And let's see. So let's see some of these things. So for example, we look into one industry, which is alcoholic beverage environment score. So in this beverage alcoholic environment score, right? So if before I show you all these things, right? What is the first thing that comes to your mind? Like which part here, E or S or G, that you think that they will score high risk? They will have a high score of risk. High score means high risk. Is it the E part or the S part or the G part? Yes, very good. It's the social, because it's environment as alcoholic. No, social is more. Okay, social, because you are actually causing some social impact, right? Because you are actually, this is a bad habit, so it will cause social problem. Okay, so in terms of environment, it depends on your operation part, because sometimes it's just a, you know, maybe manufacturing of the bottling or manufacturing part, whereby you may not do much waste, or maybe it's a disposal of your waste. All these things will affect, and then may not pose much risk. But what is higher the risk will be the responsible alcohol consumption. Okay, so you need to label your product well, and marketing, in your marketing you need to say that this is actually harmful or whatever. And then yeah, regulatory impact from lack of responsible drinking. So you need to let the people know, aware that responsible drinking is important. Okay, so you need to play a social responsible role in this. You know that your industry is producing alcohol, let's say, then maybe you need to participate in more of these social kind of activities in order to bring up your image. Just like those plantation companies, they want to have a renewable energy to improve their image. Okay, so you know which part you are not good at, so you need to improve your image in that sense. Then in terms of governance, I think it's pretty standard. So it's a management, they look at the decision and such that they have to ensure food safety, product quality, and things like that. Okay, you see the quality and timing of the financial disclosure as well, and also the product quality of their production as well. Okay. Okay, utility industry. So when you look at this utility industry, right, which one that comes to your mind that will give you some high risk? Okay, it's quite simple, right? It's environment, because this basically will cause a lot of emissions from the operation. So basically, in this utility industry, they will score quite high in this manner, because high means high risk. They will score high. Okay, doesn't mean that you have to score high means good. That means you score high means high risk. Okay. So impact of the waste from the operation and things like that. Then the social, in terms of the social, not much of a the only social maybe is the worker safety, right? The worker safety and accident prevention. So this part here maybe will cause some risk, because if you do not take care of the SOP of the safetyness, then if there's a one accident, just one accident alone, it will cause a lot of damage. And especially if that costs lives, then huge compensation will be, you know, will be under the whole thing. So you need to compensate a lot. So all these are the risks. Okay. And then you have the governance. The governance are mostly for the reporting, financial reporting, disclosure, and then the management and things like that. Okay. Okay. How about the banking industry? If you look into the banking industry, right, which okay, so fast. Okay, Patrick, yeah, very fast. Okay, yes. Chin, yes. Okay, it's the G is the governance. And a lot of time, but luckily our governance is very powerful from the central bank side. Bank Negara is the major governance body that govern all the banking industry, so that every bank they will, because after all we came from the financial crisis. So when you came from a financial crisis, right, all the procedures and all the resources and effort will be taken into for this industry, and then they want to improve the standards. So after this financial crisis, right, all the banking industry become in the sense that the governance is higher standard. Okay, it's not so easily, you will not see another financial crisis so easily because of the precaution that taken by our central bank. So okay, social work. Okay, in terms of the social work, right? In fact, they score pretty well because they do a lot of social CSR for the banking industry. Okay, so they do well in the sense they care for the community. The only thing, the high risk one will be this governance, because if you are not careful, you may social work. Okay, another thing, privacy and data security. How about it, right? Because for the banking industry, right, they have all our data information. So if let's say whoever stolen, or there's a data is stolen, and then that will lead to fraud or whatever, or scam or whatever. Okay, so all this will be under the social. And for the compliance will be under the governance. Okay, compliance. So there's a lot of compliance in one layer and one layer. So it's not easy now in order to have the staff stealing from the bank. Okay, last time maybe it's easier, but now it's not so easy anymore. Okay, so then you have in terms of the environment, I don't think we have much to say. You see, NA, MA, NA. So probably you don't score high risk here, and then probably you score some risk over here because of the data thing. And then over here, some governance. If let's say your bank is a small bank that lack of governance or whatever, and then you approve the loan, simply approve or whatever, then you will score high in the sense of the risk. Okay. Okay, so now let's see which industry is ESG friendly. Okay, what do you think? You tell me the name. Besides banking, what else? Data security. Okay, data security just now was the S thing. Okay, which industry is ESG friendly, meaning that they can score well, and then they score in a low risk factor, and then they can get into that index. Telco, yes. Green power, yes. Electric car, yes, very good. Okay, I have all this here. What else? Okay, technology, healthcare, solar consumer, trading and services, electric vehicle, okay, and solar energy as well. Okay, good. Okay, so far in Bursa, in terms of education, we don't have many education stocks. Okay. Okay, which industry is not ESG friendly? Which industry is not ESG friendly? Okay. Oil and gas, property, gambling, gaming. Okay, good. Tobacco. Okay, oil and gas, number one. Utility, chemical, construction, yes. Mining, steel, mining, tobacco. Yeah, these, right? Commodities, plantation. But I do not have, I didn't write there plantation. Okay, very good. It seems that you guys are doing very well. Okay. Now, then we come to the quiz part here. Okay, I have 10 stock here for you to guess what is their score. Okay, let me show you the first one first so that you know what to expect. So basically, this is a sustainalytics.com. Okay, and this one is quite a reputable website whereby it has all over the world stocks in it, and they rank them according to the ESG risk rating. So if you have 0 to 10 points is negligible, that means low risk. And then 10 to 20 point is low risk. 20 to 30 is medium risk. 30 to 40 is high risk. And then above 40 is severe risk. Okay, so you will have this kind of a rating. So in this case, it has 1,000 over. This thing is the worldwide banks, worldwide banks. So you are looking at this comparison worldwide. And so for Maybank, it's 27.2. It's considered a medium risk. Okay, so actually you can see this. Okay, wait now, I show you that website first. So this one is actually this website. I give you this. Okay. Okay, I give you this link, and then you can click in it. What about I can't see this. Hong Leong Bank, public, all the banks are about the same as public bank, as a Maybank. The banking industry are more or less the same. Okay, you can type here. Okay, public bank. PUBLIC. Public. Sometimes it didn't show. Then maybe it doesn't have. Okay, so public bank doesn't have. Bank. Bad broken. Okay, never mind. So you try yourself. Okay, you see. Okay, then are you ready for the quiz? So it's a score between 0 to I think 40 and above lah. Okay, 0 to 40 and above. So PP Bank. Oh, okay. So you managed to search, is it? PP. My line is broken. Maybe I need to refresh. PP. Got it. Yeah. What is this? No, this one, no, not this one is not the bank. This is the another company. Okay, sorry. PBB. No, I don't see it. It's not there. Okay. No, it doesn't have that public bank. Okay, doesn't matter. Okay, never mind. Okay, let's guess. Nestle. What do you think will be the score for Nestle? You just type a number 0 to 40 and above. Maybe 0 to 50 lah. You just type a number. See whether you can, guess the company itself, see whether you can guess or not. Good. Okay. Okay, let's review. Okay, let's review. So I can see that some of you think that is quite low, right? But then some of you think that is high. But what's the reason for higher? It's not that high, actually. It's 19.7. It's below 20. So the nearest is Boon Peng, 20. You see 19.7, you are very close. Another one, Zheng Yu Tan, also 20. Hey, this one, cheat one. Karel, you Google already. Okay, Adrian 20. Okay, cannot play cheat. You have to guess what? You have to guess. Okay, Petronas guess. Petronas guess. What is the score? Okay, not 63 lah. 63 is too high lah. 35. Okay, around 30, right? Okay, so let's see. 29.4, which is around 30. Okay, not as high as 40 lah, about 30. So Chai Yan Tan, you are close. Okay, 30. Now it's 29.4. Okay, then the next one, Top Glove. Interesting. Recently, last year they had this labor issue, right? But is it that bad? What do you think? Okay, some say 20. Okay, some say it's 30, 25, 25. Okay, let's review. 26. Okay, so the 25, Mary, you are close. Lily, you are close. Sing Ho, you are close. Okay. No, tomorrow can buy numbers. No lah. This three numbers how to buy also cannot buy. Okay. So 26.1 is not that bad. It's medium risk, you know, lower than the public bank, lower than the main bank. So you'll be surprised. Okay. Then Hatalega. The reason why I want to compare is because Hatalega doesn't have any bad news on the human labor thing. Top Glove had some news. Okay. So by right, it should be higher or lower. Okay, it should be lower, right? Yeah. So I see that you guys, some of you say below 20, yeah? Around 19, 20, I see most of the answer. Okay, 17.4, you are close. Okay, so those that have the 18 one, you are very close. 18 will be Joe, Evelyn, and yeah, you guys very good. Okay. Okay, now this one. Genting plantation. Plantation, I do not know whether they have any renewable. You need to read through their analyst report or their annual report, see whether they have renewable energy or not. Oh, wow, Albert, you say 9, why 9? But isn't this a plantation? Okay, cannot be less than the Nestle, right? Okay, Joe say 40. Okay, I review the answer. You probably got a shock. 47.8. Okay, I do not know which area, because for this report, right, you need to be a member, then you can click. Like there's a section whereby you can see where's the risk. But because I'm not the member, you have to pay 50,000 per year for this membership. It's too expensive. So this over here, right, they will show you what are the top ESG issue, you see. Then you can view. Of course, you have to pay for the subscription. Then you can see the top ESG issue for that particular company. So I do not have. So this one is another plantation company. Okay. Okay, so just now I saw 40. Somebody say 40. Okay. So the Joe, you are very close, right? Joanne, you are very close. Okay. How about Sime Gabi plantations? See, I want to show you like 2 plantations, just like 2 glove stock, and then not necessarily all are bad, because some can be better. Okay. This one should be better than that Genting plantation, right? Because I believe they have some renewable effort also. Okay, so I can see that you have 30, 26, and okay, let's see, 34. Okay, anybody say 35? 32. Chin Chin, you are close. 32, and 35. Cheyenne, you are close. 35. Tony also close, and then Yao Sim Ken also close. Muhammad Eddie also close. Adrian also close. Eng Sing Ho also close. Very good. Okay. Muhammad Eddie, yeah, Muhammad Eddie also very close. Sing Ho also very close. Very good. Okay. So that means you can kind of like estimate the score. Okay. How about BAT? Now this one, I don't know whether it's straightforward or not straightforward, but okay. So some say 50, 35, 40, 60 is too high, 35, 40. Okay, let's see. 15. Oh, some say 15. Okay. 29. Some say 29. Did he say 20? Okay. And actually, it's not that. It's medium risk. It's not that. Maybe they do a lot of good work. I mean, social corporate responsibility. So 27.8 is actually medium. So I see that Muhammad Adi, you are close, and then Chuan Hoi, you are close, and then who else? Those around the 30 region will be close. And then Yen Chuan Hoi, okay, quite good. Some of you are quite good. You are able to estimate quite accurate for quite a number of stocks. Smoke. Okay. Okay, how about Astro? Astro, media, Astro, what do you think? What could be the score? I see that score started to come down. Okay, 20, 13, 15. So that means you can actually estimate looking at the stock itself. 18, 20, okay, very good. 19. Okay, let's see. 16 is the lowest among these stocks. Okay, so I can see that just now somebody said 15. Okay, Chi Hong Tan, you are close. Xiao Ki Wo, you are close. Muhammad Adi, you are not that close now. Dominic, you are close. Lee Seng Guan, you are close. And Kenny Tan, you are not that close. Boon Peng, you are close. Dominic, okay, very good. Okay, so you guys are actually getting the hang of it. You can check public bank by key in 1295. Oh, 1295. Okay, let's see public bank. Okay, 1295. You are right. Oh, can key in the stock code. Okay, smart. So the risk is higher than the Maybank. So that means Hong Leong Bank also can key in the stock code. Okay, so public bank is higher than Maybank. Okay, but I don't know what is Hong Leong Bank's stock code. So if you key in, you can also see. It's interesting to see among the banks, right, which banks are of a higher ESG risk. 5819. Okay, 5819. Got it. Oh, this is lower than the Maybank. Okay, yeah, lower than the Maybank. That's good. Wow, well done. Okay, let's go back. Gamuda construction. What do you think? Gamuda 25, 35, 40, 30, 30, 30. I see a lot of 30. Okay, let's see. Who say 40? You are very close. Just now, somebody say 40. Where are you? Lily, you are very close. Then who else? Okay, we only have 140, which is Lily. Okay, well done. Okay, somebody say something. Maybe you can group all the companies in the same industry and see average. That will take a lot of time. If you have the time, you can do it. Because some Chin is saying that we can group all the companies in the same industry and then we can see their score. Of course, if you have the time, you just have to do it. Okay, good. Okay, well done. So we have all the 10 quizzes. Now we'll continue the last part. Okay, so using the ESG rating in the practice. So in the practice, right, what are the usage of this ESG? So the ratings can be used as the building blocks for integrating ESG into investments in variety of ways, including active portfolio management, benchmark construction, and company engagement. So not necessarily is a portfolio management. You can even have it like company engagement. Like if you want to do business with a certain company, maybe it can be a company engagement. Not necessarily has to be investor relation. And then portfolio evaluation and manager due diligence. So basically in practice, you can use this as a portfolio evaluation and manager due diligence. So in fact, it is part of the portfolio evaluation. Okay, many funds now they are practicing ESG, and some funds they even take out that industry that are of high risk, because rather than putting into your portfolio, right, the risk itself is too high, so that means they want to take it out. So certain industries, and the engagement and the stewardship. Okay, so and also because of the governance. Okay, so in the sense that you want to see that which company is good management. So usually those low score ones are the good management company as well. Okay, like we saw just now, Hong Leong Bank, right? Okay. Then the risk management, the ESG rating enable investors to identify companies with the greatest ESG exposure and can be used alongside conventional risk manager to provide a complementary perspective. So it's a form of a risk management. So you can see that those with the 40 and above, right? Probably you want to avoid those stock in your portfolio. Okay. Then research and analysis. Okay, the risk and return relationship of different ESG aspects will vary. So the ESG ratings provide a granular and comprehensive data set for research and analysis. So in fact, for all the research team, right, they will have to have this ESG rating in their normal research work. And some research team, they have their own ESG rating scorecard. That means they come up with their own scorecard and then they evaluate. So those are very tedious. And then, but certain, most of the funds, right, they will subscribe to those institution, like the one that I show you, that you have to pay 50,000 USD per year, okay, to subscribe the service. Okay, we have come to the end. I'm sure I see that most of you have basically grasped the knowledge and the essence of estimating the ESG score. Because a lot of time, the first time when I got this topic, ESG, wow, this is a very tough topic. And I read through a lot of YouTube and articles, and a lot of time, find this topic very, very boring and dry. So I was wondering how to make this session, more interesting. So then I think in this approach, participants will learn more. Okay, so by giving you the perspective from the scorecard template, you have to look into the scorecard and see how they actually do the criteria filter scoring part, and then also some of the scoring, okay, the actual scoring for our Bursa Malaysia stocks. Okay, so I conclude here and I pass back to Shane.
Thank you so much, Pauline, for putting in your best effort to make this as interesting and engaging as you possibly can in this session. So thank you so much, Pauline. So if you have any question for Pauline, you may ask her in the Q&A box, not the chat box. Ask her in the Q&A box. All right. So the first question is by Kian Singh, who want to ask, does having non-executive political appointees on the board of director have any impact on the governance portion of the ESG of the company?
Okay, so if you are you're just on the board of director, I'm sure you have some say, but then your advice is just an advice, may not be taken into consideration. Because overall you are just a non-executive. Okay, so maybe it's just you can give some advice, but then they may not want to take your advice. So that's what I see.
So there will be no impact to the ESG scoring, huh?
Yeah, I would think like that.
CC would like to ask if whether you can provide or where you can find all what are the top 30 best ESG companies on Bursa Malaysia.
Just now I show you the website where you can see the checking the score, the scoring part. So maybe you can search one by one. You just have to key in those companies that you are in a watch list. You just key in and then see what's the score, and then see if you can get some of the good scoring. Good scoring meaning low scoring. Okay, below 30. I think below 30 is good. Okay.
Okay. So if any more questions for Pauline, you can write in in the comment box. Sorry, Q&A box. Now, is there any tax benefit if that company comply with ESG? That's asked by Haziq.
In Malaysia, not that I know of. Maybe there is, but not that I know of. Okay, I haven't heard about it yet.
I also haven't heard about it. So I think it's no. I think it's no. Of course, I'm not an expert on this topic, so this is my opinion only. Okay, now, Boon Peng would like to ask, like, any idea what percentage investment company put ESG to their portfolio? Is
This is
it
a good
significant?
one. Yeah, because different funds, right? They have their different policies. Some funds could be significant, but some funds are less significant. So it depends on the fund's overall management style or the principles. So I would think that maybe some of those like BlackRock and those reputable large fund management company, maybe they put more emphasis onto the ESG, like those developed countries. Developing countries, maybe they put less emphasis on the ESG. Okay, because the environment, the trading environment is different. So yeah, I would think like that. So it depends on the fund manager, the team, their principal as a whole. Okay, yeah, thanks.
Okay, I think the question is addressed. And looks like no questions for now. Okay, looks like there's no questions for now. Okay, there's one question asked, how would you rate ESG on crypto?
Basically, this one is a virtual thing. It doesn't, the mining thing, the mining part is cause some pollution because of the mining part, right? Because it requires a lot of electricity. So other than that, in terms of the social impact, I wouldn't think too much on the social impact because this thing doesn't have much of employees or whatever. Then for the governance, there's a problem. Okay, there may be a problem in the governance. So in terms of the governance, there's a problem, and then in terms of the environment, there is also a problem because of the pollution. So if I were to give a score, I would give like maybe 40 or 35 and above, 35 to 40. Okay. What about you, Lily? How much would you give? Okay, decentralization in crypto. Okay.
Okay, so it looks like there's no more question on our Q&A box anymore. So, well, thank you so much, Pauline, for doing this ESG investing session for us.